Hey, what's going on guys, it's Trevor here. Welcome back to another video. Now in today's video we'll be going over how you can start investing $100 per week as soon as possible. Now this video is laid out step by step so you can follow these steps and go through each of these steps as you are advancing to eventually start investing $100 per week. Now before the video starts, make sure you smash the like button. It massively helps out with the YouTube algorithm so more people can see this video, and also make sure to comment down below if you have any other video ideas, and also make sure to get your 4 free stocks down below when you deposit $100 with Webull, valued up to $3,700 and a minimum of $21. So it's essentially free money just by depositing $100 with Webull, which is a stock trading app. We'll jump right into it. Now step number 1 is going to be getting $100, or at least having $100 in the first place. Now the first step basically to start investing $100 per week is to have $100 to start with, which is kind of common sense. Now the first thing I would do is basically look at your day-to-day life and see where you can save a bit of money. So essentially you just need to save $14 per week to have $100 extra to invest. Now of course if you can't already save $14 per week, you need to basically look for other ways to make that money. So essentially if you already have a job, then you really need to first start getting a part-time job, switching careers, or learning a new skill. Whatever you need to do to have an extra $100 per week to invest, you need to do it as soon as possible, because thinking of investing at this point where you're making less than having $100 per week to invest, and thinking investing will get you a better return on investment is a complete lie. So at your current state right now, where you don't have $100 to invest per week, your highest ROI, which is return on investment, is actually just getting an extra work or extra type of job so you can have extra money to consistently save and invest every single week. Now this should be a complete priority to you instead of basically saving $100 per week, because if you can't have the extra $100 per week, you won't have it any other way by investing what you do have. Hope that makes sense. Now we'll jump into step number 2. Now step number 2 is having a emergency fund. Now emergency fund is just a savings account with money that you keep in, just to have in case of emergency, something catastrophic happens that you need to cover 3 to 6 months of your expenses. Because for example, you lose your job and then there's no more stimulus money that's coming from the government. You need to rely on your emergency fund that is there when you most need it. So having an emergency fund is really important, so you can at least cover 3 to 6 months worth of cash to cover you overhead while you look for another job or find another source of income to support you while during the downtimes in the economy, just like what has happened inside the pandemic of 2020. Now step number 3 is using $100 per week to max out your Roth IRA. Now if you don't know what a Roth IRA is, I'll quickly explain it. It is basically a tax advantage account, retirement account that lets you contribute post-tax money. So meaning tax has already been taken out, and when you put it in there and at the age of 59.5, all the profit in there can be accessed tax-free. So that is basically what you should do for step 3 currently, is max out your Roth IRA. Currently in 2020, the previous max amount was $6,000 per year. So if you do $100 every single week times 52, or I think it's 54, that should be $5,400 a week. And if you can invest more than $100, great. The extra money will cover the extra $600 for the Roth IRA, and also spill over if you want to invest in some other stocks as well. Now step number 4 is having an alternative to the Roth IRA. Now most people call this a 401k, And depending on the employer, this could be even better than a Roth IRA, because this is an account where you invest pre-tax money into, meaning that means you're going to be taxed when you begin withdrawing the money after 59 and a half. So from my perspective, the 401k only really makes sense in a few scenarios. The first scenario is when your employer offers some sort of benefit called a 401k match. Now this is when they match your contribution dollar for dollar up to a certain amount. So let's say the certain amount is $2,000. So if you contribute $2,000, they'll also match that. So that's $4,000 for you. So in that scenario, a 401k is roughly a bit better than the Roth IRA, because of, you're basically getting double what you're investing in. Now, secondly, we have the second scenario is when a 401k really makes sense is when you're in a really high tax bracket now, and you also expect to retire on a much less lower tax bracket. That's also what makes sense if you decide to go for a 401k, because you're shoveling into the 401k without tax, and you're going to get taxed when you retire. So if you are in a high income bracket right now and you start shoveling money into the 401k, and then when you are 59 and a half, you fall into the lower tax bracket because you stop working, or you earn much less money, you just get some sort of side job, then you're in a lower tax bracket, and then you can basically receive that money from the 401k with tax. However, it's not going to be as much because you're in the lower tax bracket. So those are the two scenarios that would really make sense for a 401k over a Roth IRA. Hope that makes sense. Of course, if you have any questions, leave them down below. Now, the fifth step is to use this extra money to pay down any sort of high interest debt that you have. So paying down debt is essentially getting a free guaranteed return on your money at whatever interest rate that you're paying, because if you aren't paying it down, it's costing you whatever the interest rate is. Let's say 20% interest rate, you're basically losing 20%. So if you're paying the interest rate off, you're basically getting 20% back, essentially just by paying off the debt. So that is step number 5. Now, step number 6 is to spend $100 per week investing back into yourself. Now, after you have completed all these steps from step 1 to step 5, and you start investing into your Roth IRA and your 401k, in some cases, this is an optional step, of course, but you should be spending $100 per week investing back into yourself. Now, here's the thing. When you look at the ROI of investing $100 per week, in the beginning, it's not very much. But even if you get an incredible 20% return per year, which is completely doable, I got actually a return of 15% over 5 years, and what that is we're talking about maybe $1,000 in profit for the year, and even then it looks quite pale comparison to what you could do for yourself. What I mean by investing in yourself is some sort of training, some sort of course, some sort of extra skill that you can learn to apply and start a business or start some sort of side hustle to also have another source of income, because you don't want to rely on one source of income. Because of what we learned in 2020, relying on one source of income can be quite bad, and so much people lost jobs and actually struggled financially because of their one source of income and no emergency fund from step number 2. So that is step number 6, is to invest in yourself, get better, and basically better yourself, level yourself up, and so you can start advancing yourself and start making more money and start moving up in the world. Now, step number 7 is to invest $100 per week in a taxable brokerage account. Now, after you max out the 401k or the Roth IRA, you need to basically don't stop at there. You need to basically start investing into a taxable brokerage account. Now, by doing this, you're gonna be getting access to all your money anytime you need it. So, which is quite sweet, because if you make, let's say you buy Tesla stock at the split at $200, it goes up to $800. You've quadrupled your money and you put in $1,000, so that's $4,000. You can take that out. It's going to be taxed, but you can take that out at any time compared to a Roth IRA or 401k, which you have to wait till you're 59 and a half. So by doing this, you basically access all your monies anytime you need it without paying any penalties for cashing out before the age of 59 and a half. However, all profits are taxed, which is why I actually really recommend you familiarize yourself with the long-term capital gain taxes and understand which bracket you're going to fall under, so you can best understand how much you're going to owe at when you sell a particular stock. So that is number 7. And the final step, or the second little final step, is step number 8, is using the money towards that you save towards some sort of your own business to generate even more money. Now this kind of goes back to step number 6, which is investing back into yourself, but step number 8 is taking it up to the next level, using this money towards some sort of business or some sort of side hustle that has the potential to generate you even more money. It's going to be in your favor, because similar to investing in yourself, this is the area where $100 per week could have an insanely high ROI. Just imagine you, for the first week, maybe you start some sort of business, you're figuring out the kinks, and instead of investing $100 in yourself, you invest your time instead. And using this time and money to invest in your company, you could have a potential insanely high ROI, spending $1,000 to start your own business, but actually generating $10,000. You just did a 1000% ROI, which is insanely high. So that's just one simple example of step number 8. And the final and last step is step number 9, is to smash the like button for the YouTube algorithm. Hope you guys enjoyed it so far, because if you did, make sure you really smash the like button. It massively helps out the channel, because we need to get this video seen to more people so they can start investing $100 as well, and also investing into the like button. So that wraps it up for this video. I hope you guys enjoyed it. If you have any questions, leave them down below, and I'll see you guys in the next one. Take care.